This week was a tale of two markets. Stocks chopped lower from Monday into Wednesday morning but bounced off an opening dump and then accelerated through Friday. Despite Fed minutes signaling a considerably more hawkish taper, the advance was stronger than expected with earnings and economic data helping lift the S&P 500 for a third consecutive day. This was the best one-week increase since July. A new report from the Commerce Department showed an unexpected rise in U.S. retail sales in September and helped further build sentiment. Consumer spending was also holding up more strongly than expected, even with the latest rise in prices and the lingering virus. This week's batch of stronger than anticipated quarterly results, including the big banks, helped soothe investors' concern over higher labor costs and supply chain constraints. And that seems to be the circumstance with investors turning positive now that the lowered earnings expectations are leveling off. So, if investors look toward the buying power coming off the sidelines, could this be the catalyst the market needs to head into the end of the year on a positive note? Well, let's take a look. Today we're going to look at the three charts, beginning here with the monthly chart, moving to the weekly and then the daily. Here on the monthly chart, we closed at 445.87 on Friday, and what makes me nervous looking at this chart is the separation between the current level and the 20 EMA as well as the 50 EMA. When we get this high, there's always a chance for a correction. But we've come through this downdraft and we seem to be heading back up, and we'll look at that more later in the daily chart. But right now, I'm still a little nervous. Moving on down here into volume, and that looks fine. Continuing down into the MAC, and you can see here that we had this hesitation in the fast line. The slow line is continuing on up, but with that hesitation, as you can see here, the histogram is starting to roll over. So that's a bit of my nervousness, but I think we'll get past that here. Moving down into the price rate of change, we had this big spike at this point, so we're going to look for a rebound here, a reflection up and off that slow line, looking for another move up in the price rate of change, at least the fast line. But we have to watch out for a double top. Moving down here into the RSI, we don't get double tops all that often. We did back here in 2007. What we're looking for is something like this peak, similar to this peak here, and then a secondary move up. And we're getting that secondary move, but we have to wait and see and how it evolves and forms. When you get to a second top, oftentimes there can be a double top in the price chart, and then on the way down you go. We'll have to watch out for that, because here in the stochastics, coming from the underside, as in the MAC, coming in from the underside, there's always a chance that we can move on up but get reflected or rejected from that slow line on the way down. I don't think that's going to happen this time, but that's always something that you need to watch out for. Williams looks fine. Back up here to the price chart, and you can see that we seem to be doing relatively well even though we're at lofty levels. Let's now go to the weekly chart. And now moving into the 3-year weekly chart on the spiders, from that top here, we've come on down here just barely below that 20 EMA, but let's call it a reflection. Now, we had the similar reflection at this point, came on down. The reflection was a little bit better, but we came up here to this point and then back down again. So that's what I want to watch out for, and what I was talking about when we were looking at the monthly chart. We're having a move on up, and we hope that we don't stall out and head back down again. Into the volume looks fine, but here in the MAC is what I'm talking about. When you come down through the slow line, and then the fast line decides to bottom and base and head back on up from the underside, oftentimes it can fail and get reflected. On the way down here, that possibility is a little bit greater. So we want to watch out and see that double top, because we might come down for another downdraft. Here in the histogram, we went negative on that, and we're coming on our way up too. So that again is another cautionary flag. Price rate of change looks fine, and the relative strength looks decent as well, coming all the way from below that 50 line, not too far below, but heading on up here, and it's gaining strength. You can see here in the stochastics, pretty much the same thing. This is well above the 50 or midline, so I think this is showing some decent strength. But go back here, you can see pretty much the same thing. We had the move, and then we had the stall out here, and then back down again. We want to watch out for that. So we'll have our eyes and ears open to whatever happens here in the next few weeks or so, because if it does stall, that's when it's going to occur, is in the next few weeks. Now, Williams looks fine, looks like it's on its way up. Back up here to the price chart, and one last look at that. Looks healthy enough, but now let's take a look at the daily. And now looking at the 6-month daily chart on the spiders, and as we talked about last week, we came down here for another attempt at that bottom, and we successfully tested at that level there, and we're heading on up. Now, I'm always looking for the downside. So what I see here, the negativity that I see, is actually the gap from here to here, and then this gap from here to here. Those gaps can get filled on the way down. Now, this move from here all the way up was pretty swift, pretty quick, and I would like to see something a little bit more controlled. We had our march all the way up. We had a few missteps here and there, but we had a decent controlled march all the way up. That's what I like to see, not this gap up in the morning and then the close and then the next gap up. That is very speculative. I think there's a lot of buy the dip mentality out there. So we need to watch this, because these can stall out. Moving on down into the volume, looks fine. And there in the MAC, very nice move all the way down here, bottom and basing. It climbed aboard the slow line, and then it took off. Into the MAC, you can see here the histogram, nice recovery, base, bottom, and heading on up. And from this point here, you see that acceleration. Acceleration isn't bad, but this might be a little quick. So we'll just have to wait and see how this evolves into next week. We expected the recovery late this week or into next week, and I think that's exactly what we're getting. Nice move here on our way up. Into the RSI, same thing, and then the stochastics. These oscillators all look decent. The only thing that shows a red or cautionary flag, again, are those gaps. So let's see where this heads into next week, and we'll have an idea if it starts to stall out, say, toward the end of the week. And for today, that's ChewDog Charts. Thank you.